Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, January the 12th. The year's 2022. Let's talk trading. Problem solving part 3. These videos are for educational purposes only. Your results may differ from mine. Yesterday, I tried to recite some quotes, and I think I got one right, and I think I missed one where Bruce Lee, that's the quote I got right. Simplicity is the key to brilliance. But the other one was this one. Perfection is achieved not when there is nothing more to add, but when there is nothing left to take away. So that really hits home for trading, and probably mentioned that over the years of making these videos. You know, we talk about charts on drugs where there's so many indicators you can't see price. But, you know, another problem is sometimes, you know, not keeping it simple in the sense that, you know, looking at first principles of, you know, making money, and then looking at what happens, you know, after you're in the trade or while you're in the trade versus when you're waiting to get in a trade. And so if you keep thinking about what do you do when you're in that trade, what makes you stay in the trade or get out of the trade, you know, we talk about having the money and risk management as part of it. But the other part is knowing or predicting what price is going to do. And usually you try and do that before you enter the trade. But it's really key to be paying attention to that while you're in the trade, because what you don't want to do is put a trade on and then become a cheerleader or a spectator. What you want to look at is the reason why you entered that trade still valid? So for example, if you entered a trade because price was above the daily open and price goes below the daily open, and you entered the trade long, chances are you're probably now going to have a loss unless price, you know, turns around, or you have a really big stop loss and you can wait for price to turn around. But in the short term, you're underwater. And the question is, how long can you stay underwater and how deep can you go? But what we really want to do is, if we're having a problem and we want to solve it with our trading, is we want to know if we're not focusing on what price is doing at the moment. So right here on the daily chart, I can see price is making a new high. So I don't need the dashboard to tell me that. I can just look and see, yep, price made a new high. So for example, you know, when you look at these charts and you know, whether or not you do frequency distributions or what, but it's kind of easy to see when price, you know, breaks out of a daily high or low, it's usually by a bunch of pips. You know, right here, it wasn't that many pips, it doesn't look like, but let's take a look. The low was 36.01 here, and the low here was 35.99. Is that right? That looks like it's bigger than one pip to me, but I guess it's not. But that just proves my point that, you know, does it work every time? No, of course not. Low 36.01, low 35.99. So maybe 2 pips, right? So the question is, had you gone short here? First off was that a good idea to go short? Well, let's take a look here. This must have been a Sunday candle. That's what I'm starting to think. So that's probably not a, no, this particular broker doesn't have Sunday candles. So when you see here, price had already moved how many pips off the high from 12? Oh, this is H1. This isn't daily. No wonder it's so small. But let's just say you did one short anyway. Question is, did the price pretty much do its range for that particular time of day? And it looks like it probably did. So if you're in that trade, if you were to get in that trade and price has pretty much done its range for that particular hour, then the question is, do you need to work on your entry trigger, which I would say you might want to take a look at it, or your analysis leading up to the entry, or two, once you got in the trade and you see it only went 2 pips your direction and stopped, maybe you should just take it. Because that's what I'm finding out, especially the way Walmart and I like to trade. I was in a trade yesterday and it was going well, and then one ball appeared. And I have a rule: if one ball appears and gets in my way, I just get out, because usually for me, the one ball means price is stopped and it's going to come back. And so, sure, there's a couple of times where it might reverse on me. Or rather, I'm saying it might continue on me. But I just know it's much better over the long haul if I make every one of those trades a winner, as opposed to letting price reverse on me. Because a problem sometimes is wanting to get it back. So let's say you're up 7 pips. Now it reverses, you're only up 4. You want to get those 3 pips back. Next thing you know, you're up 1 pip, or pretty much at break even. And then it's like, if you wait any longer, now you're down underwater. So you really have to remember what your trading plan says to do. Whether you have an exit playbook or if it's pure money management, which could be part of your playbook, of course. Your exit playbook doesn't have to be anything like mine. You can do it however you want. But the fact is, if you're having problems in trading, do you have an exit playbook, which is part of your overall trading plan? So that's just something to think about. So, for example, I bet there was a lot of traders who've been wanting to short the pound up here. But as you can see, it pulled back to somewhere between the 23 and 38 level here. Looking just on the M1. And then it took off and just made a new high. And for the range for the day, we've got 67 pips, which isn't much. You can see right here, you have an M1 higher low trigger that just happened that last bar. And you can see right now, it's still pushing up. Opportunity is there. But here's a case I'm not sure. Let's see. This would be 3, 4. So the one ball probably appeared right here, and I would have most likely just exited out of the trade and maybe left a couple of pips on the table here. But that's okay because I got the lion's share. No big deal. So right here, you can see price just put in a one ball. So from this point to where it is right now, you got over 3 pips. And as you can see, it just shot back up. And that's why I do that. Okay, so let's go back and take a look at the charts just to run through the day here. Let's see, we'll start with the monthly, 4 pips off the monthly high. And you can look to the left and see right there, we've come back from 2 months ago. Weekly, new high. And once again, you can look left right here. There's a uncovered pivot, uncovered weekly pivot here, uncovered weekly pivot there. Went through last year's open, heading toward last year's midpoint. And yesterday there was a nice breakout of the weekly open range. $158 pips above the yearly and monthly open, 114 above the weekly open. Not much inside bar action. I'm curious. We're about 150 pips away from that inside bar high that happened 3 months ago. Funny, nice move on the pound, but only 67 pips. No pairs over 100. And there was even red news out today on the US. Buy zone, once again showing here a short and a buy that didn't really do much on the first time it entered. But here, last hour, we rocketed through, put in a new daily high and kept going. Red rats, I know you want to feast, but you really need to be careful. See, price broke through the previous day's high. And if you look at, the average range or ATR or the frequency distribution, it still has some room to go. Pivot trading plan near the pivot bias is long. And so near S1, we got within the central pivot range here. And then price took off. So sometimes, a lot of traders do use these pivots. And so knowing that, this is a line you might want to trade away from. So if it's above the line, you look for reasons to go long. If it's below that line, you look for reasons to go short. And that's true of just about any horizontal line. As you can see, we missed the daily pivot. We took out the weekly, and we're still ways away from the monthly pivot, 273 pips. In and out of that upper wick zone. We've already checked out that. So, fellow traders, that's about time for today. Those 15 minutes sure do go by quickly. So when you're looking at, solving problems, take a look at the areas I suggest you look in. And maybe, if you want, leave me a comment. Maybe there's an area you might want me to discuss, an area to look at to solve a problem. So remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.